Now, moving towards the third form of efficient market is known as strong form of efficiency. Practically very difficult to understand because this is something which we can't see in the real world. Let's discuss. Strong form of efficient market. Any stock exchange, if it is characterized as strong form of efficient market, which means the companies that are trading in such kind of a stock market, all companies' share prices will include their past information. So, no issues. All those companies' share prices will react to publicly available information. No issues at all. Okay? And the last thing is, all companies' share prices will also react to any insider information. Now, this last thing is interesting. And to understand this last thing, we need to just understand first or recall the concept of insider news or information. I'm sure you must have heard about this word insider news in your previous studies or somewhere in your job markets. Insider news means any piece of information, any particular information which is not available to the public. And there are few people, the most important ones, actually know about this information. For example, the board of directors, maybe auditors, the senior auditors or the partner of the firm. So they know about this type of an information. This is insider news, not publicly available to the shareholder. Shareholder is not aware about this information. For example, if the board is taking a decision to make an investment into a big project, and even they have decided to invest, but they haven't announced that information in the market, so that is an insider information. Another example is the board of directors have decided the amount of dividend that they will pay to the shareholders, but they haven't disclosed that amount of dividend yet, so that is another example of insider information. And let me give you some example that relates to your own qualification. The results are ready but yet not disclosed, not published. ACCA people know the result of the students, so this is an insider information. So insider information is a one that certain people know about it. In general, public shareholders have no idea. And this information is a valuable information. It's not a normal information. It's a valuable information because if someone has this information, let me repeat, this is a very important thing, okay? If someone has this information, that particular person can take real advantage over those who do not have this information. Wow. A very important million-dollar statement. Those who have this information can take unfair advantage over those who do not have such an information. This is insider information because it has some importance. That is why it's valuable. That is why the laws and regulations are there. If someone uses this insider information illegally, there are penalties, fines. So this is valuable information. Now, the impact of this information quickly goes into the share price is what we have seen in strong form of efficiency. And I'll give you one example here. Actually, it's very difficult to prove this third one because in practical world, strong form of efficient market will not exist. Okay? Normally, countries that are well-developed countries, their stock exchanges are semi-strong form of efficient markets. Countries that are underdeveloped ones, so their stock market is below semi-strong form of efficiency. So you won't find this strong form of efficient market. Anyways, let me give you the example. That is what important right now. A good example. For example, let's make a situation here. Let's make a situation. For example, I am one of the board of director of company A and you are the other board of director. Okay? I am one of the directors, a senior director, and you are the other senior director. Now we know that stock exchange is a strong form of efficient market. We know that. We very clearly know this. Okay? We both decided to have a quick confidential discussion about the dividend. Quick confidential discussion about the dividend. Because we know that insider news will have a quick impact on the share price. So we went confidential, we went to some secret place, a secret kind of a boardroom. Nobody knew about it. And we are in that room, you and me, and we are taking a dividend decision. We are exploring different options. Everybody is giving their own suggestions. And finally, we had a consensus about the dividend. Now, that room is completely, sealed type of a room. Nobody can hear outside the walls. It's a soundproof room, I would say. And whatever decision we take, nobody can listen to that decision. But still, we were of the view that let's keep it very confidential and we will not even speak. And what we'll do, we'll just finalize the dividend by the actions of our hand. For example, I am proposing. Now this means $1 dividend. In return, you said $2 dividend. We are not speaking, okay? It's just the actions. I hope you're getting my point. And like this, we had a consensus by looking at each other and we took a decision of $1.5 dividend per share, for example. So we reached to a common consensus and we didn't wrote it anywhere. Neither we spoke about it, and it was just eye contact through which we took a decision. So this means other than we both, nobody has the idea about what the dividend has been decided. Nobody knew about it. This is an insider information. Only two people know, the one who were part of the discussion for deciding the dividend. Now, if it is a strong form of efficient market, the decision that we took by looking at each other, by staring at each other, once we had the consensus what the dividend is, the impact of that will be in the share price. It's a strong form of efficient market. The impact will automatically go in the share price. This dividend decision information will have an impact on the share price. The share price will react. And you might be thinking, how? Nobody knew about it. But yes, this is strong form of efficient market. Insider news will have an impact on the share price. If that dividend decision that we took is a good one for the shareholder, favorable one. I know shareholder have no idea about it, but still, if it is a good one, keeping in mind their perspective, the share price will go up. And if that dividend is not good, keeping in mind the shareholder's expectation, the share price will fall. So practically speaking, you might be thinking, this is not possible. But yes, this is how it is. This is strong firm efficient market, where the impact of that information goes into the share price, even though it is not a publicly available information. Nobody knew about this one, but theoretically, yes, the impact will go into the share price. So I hope you understood my example, and the example that I gave was a one in which I made this nearly impossible that somebody knew about the dividend. Just to give you the idea that how much efficient the market is, and how much efficiency you can see here, that the information is impacting the share price. Was just to give you the idea that in strong firm efficiency, theoretically this happens. This happens. So, hope the example is clear of strong firm efficient market as well as of semi-strong and weak firm efficient market, and a good summary is in front of you that will help you to remember the key points of each type of market efficiency.